GTII finding the upside that we were talking about just yesterday. Let's go ahead and find out what could be happening for the following sessions. What is up, you guys? Thank you so much for stopping by once again on this happy Friday. This is ARCa coming at you with a GTII technicals and raw price action thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCab. With that said, let's go ahead and dive right into the charts. Okay, you guys, so before we get started, let's just go ahead and refer to our backlogs just like we always do, right? Because GTII tends to be a little special to ARCa, but take a listen. If I'm being very discretionary about it, I can see the upside potentially land at about, again, in a discretionary manner, anywhere between 91 cents to about 95 cents at the very top. All right, so this is just wanted to go ahead and touch bases with that because it was at the end of the video. I know a lot of people don't watch it all the way to the end, but that's around where I put the final puzzle pieces together. And if you can see, this is the 4-hour chart that we're in today. You can see the dates right down here, and you can see that based on the candle high from this iteration, you can see the values of the candles right up here, okay? Particular to the H where it says high, you can see that we reached 94.90, so just about 95 cents, okay? So it is absolutely what we were talking about, okay? And it is, of course, the resistance of our ascending wedge, okay? I just want to make sure that everybody is on the same page here and knows the play and knows how it's moving, okay? You guys, I'm not trying to spread any FUD. I'm just trying to iterate or say what the charts are saying simplistically, as simple as that is, okay? That's it. All right, so let's go ahead and now touch on this chart right over here, okay, you guys, because there is, and this is what I've been warning about, okay? This is now the pivots are actually starting to happen on the 3-day chart of the momentum oscillator, okay? So I did warn about us potentially finding these pivots now starting that weakening of the upside, right? So, and it's very much in accordance to what's happening within this waveform, okay? So it looks like we may absolutely be respecting this, and there could be a continuation to the downside or not. But let's just go ahead and verify what could be happening next, okay? Let's go ahead and take a look at our RSI divergence, okay? So in this chart, you can see that we have, okay, let me just make this a little larger so that you guys can understand what I'm talking about, okay, you guys? So yes, what we're looking at here are drives of regular bearish divergence, which usually happens when momentum is making a series of lower highs, and the price action is making a series of higher highs, okay? So we have two drives. First of all, we do have two drives of phantom hidden bearish divergence, which are these, and two drives of phantom regular bearish divergence, which are these two, okay? So the reason why I'm pointing this out right now is because you can see that we noticed these drives on about January 5th, and we have continued to the downside just like we talked about for the last few days, okay? So it is moving downward. It's moving downward gradually, okay? So that's a good thing. We don't want this thing to capitulate. We also don't want it to rip to the upside immediately. We want it to be making those gradual moves so that we can know and understand the play and play it appropriately, okay, you guys? So now that okay, first of all, if you don't know what a divergence is a divergence is the opposition of price action versus momentum, okay? So in this case, momentum represented by this indicator RSI, relative strength index, okay? So now if it's gauging strength as an index, like a chart like this or an indicator like this, then you can see that the strength is now favoring the bears a little more, okay? So particular to the RSI, the upper half of the RSI is called the bullish control zone, and the lower half is the bearish control zone, okay? So both zones have a weakness percentile located in the middle, and both zones also have a strength percentile in the outer rims of it, okay? So this is the bull strength percentile, and this is the bear strength, okay? So you can see that the 12-hour RSI has now jumped in to the bear strength percentile, okay? And it has now reached slightly outside of the gravitational zone, okay? Usually a gravitational zone could be considered to be 2% at or above or under the border of either percentile anywhere in the spectrum, okay? So you have 2% up being that being that gravitational pull, 2% down being that gravitational pull. What do the gravitational pulls do? They actually do exactly what it sounds like. When we are still within that gravitational zone, we can actually get pulled right back into the prior zone or the following zone, depending on the position that we're on or in. Okay, so let's go ahead and now open up a multi-pane so that we can gain an understanding of where price action can take us. Okay, so just like we always do, let's go ahead and start off with the 30-minute immediate short-term time frame. Okay, so this is the 30-minute immediate short-term RSI. Please remember that the purple line represents the RSI signal itself, and the pink line represents the 14-day simple moving average. Okay, so you can see that the immediate short-term time frame, 30-minute, is suggesting a continuation to the upside. Okay, and it has moved above the 14-day moving average, which is very bullish. Okay, but please also understand that this is just a 30-minute time frame, and it is likely to live out pretty fast. Okay. Now, particular to the bi-hourly chart, we have made a bullish cross. Okay, now mind your position of the RSI signal, okay? Because if we're right at that gravitational zone, which we are, we can face a pull right into that next zone. But please look at what happens when we're in these zones, okay? So we were here a couple days ago we were here just yesterday, right? And we got pulled into the following zone, okay? So please notice that it's still within the 42%, okay? And then we got pulled right back into the other one, okay? So now we actually failed it just a little bit. We came back, and now we're sitting at that gravitational point again. The difference is this time is that we have the 14-day moving average as a support, meaning that we're likely to come back up and potentially find a pull right back in. So what the bi-hourly could be telling us is that there could be a little bit of indecision in the markets, and it's going to give us a slightly bullish outlook followed by a continuation to the downside. Why am I suggesting downside? Well, because the 6-hour is giving us that rejection from the 14-day moving average, and it gave us a rejection within the 42%, which means that we're going to get that pull right back into the following zone, being the bear strength. Okay, so in this case, opposed from the other iterations, we actually now have an official resistance from the 14-day moving average, which is now a bigger reason to continue to the downside. Okay, so now the daily time frame, since we already saw the 12-hour divergence chart, you can see that we're right at the junction between the bear weakness and the bear strength, and now we're getting a fresh little pivot on the 14-day moving average, suggesting a potential downside continuation incoming. Okay, so maybe if it's not Tuesday, then there is the possibility that we can actually see that downside on Wednesday or Thursday. Okay, so more likely on Wednesday. But let's go ahead and now just take a look at what the upper time frames have to offer. Okay, so you can see that the bi-daily actually does have some sideways trading happening right here. It may be a little bit of a little bullish, little bearish here and there, and this is the 3-day actually showing resistance from the 14-day moving average and suggesting a continuation to the downside at the border between the bear weakness and the bear strength, signaling a very probable downside continuation. And the 5-day is absolutely still suggesting downside now that it is within that gravitational pull. Please notice the 14-day moving average giving us a massive hint above us. Okay, so this is telling me that we may see a little bit of a recovery in the early session Tuesday, and very likely we can actually see a resistance touch. So just like in the videos, just like every other iteration, you guys, I have to be as discretionary as I can be. So if I were to just put a quick guess on this, I think that we can actually see the top side of about 90 cents, 90.97 to be exact, probably 91 cents, and or about 92.27, okay, just around there, 92.33. So this would be essentially the area of resistance that we can find before a continuation to the downside. Okay, now again, I can give you a secondary area of resistance, but this is the less likely area for us to hit. Okay, and that would be essentially between let's see, the wick high, I'm sorry, the candle high of our today's candle at about 96, just about almost 95 cents, to about to about just about 99.96, just about $1. Okay, that would be our top side, best case scenario, before a continuation to the downside. Okay, you guys. So if it hasn't already validated or confirmed the newly converted support into now a resistance, then the following days could be that validation for a resistance touch. Okay, you guys. So yeah, I'm still looking at the downside, like I told you guys, regarding the levels of about 65 cents to about 45 cents. Okay, that would be essentially the reloading area, or the demand zone, right before a continuation onto the upside. All right, you guys. So please know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I can't suggest for you to buy or sell any assets whatsoever. Okay, do your own DD and everything will be just fine. If you feel like you want to chart alongside me like the way I'm doing, go ahead and refer to the link in the description below for the TradingView software. Okay, I have been accepted as an affiliate, sorry, to the company, and it would greatly help me out if you did start an account with them. Okay, you guys. So now, if you also want to get in touch with me, the links will also be included in the description below for Twitter and for Discord. Definitely don't fall for any of the scammers in the comments. All they want to do is take your cash. Okay, I don't have a WhatsApp. I will definitely never reach out to you in that manner, and I will certainly not initiate any conversation with you first. All right, you guys. With that said, I wish you well, a very good night and long weekend, and I will catch you at the bell on Tuesday. Adios.